Well, good afternoon and welcome to Midcap Radar live from the CNBC TV18 Motilal Oswal studio. I'm Vivek Iyer and with me today is Mangalam Malu. Good afternoon, Mangalam. Well, a choppy trading session. Nifty, as we speak, at the 25,900 level. Quite a lot of movers, but largely tracking earnings, and that's what markets are reacting to.
Absolutely, Vivek, tracking earnings. But the important part is the frontline index. Even though, it's lower today, we haven't seen a bigger gash below that 25,900 mark. In fact, if anything, it's seen a bit of a recovery from 25,900 levels itself. So now it's over to the last couple of hours of trade to see whether this holds or not. So we'll monitor that as we go along. And the mid-cap index as well is not falling as much as the frontline indices. So we'll talk about that in just a bit as well. But first up, all the top stories that we're tracking this afternoon for you. Stocks slip as the Fed Chair Powell has cast a doubt over December rate cut, and the street is trying to assess the implications of the Trump-Xi trade. For metals and financial services are the bigger drags, while PSU banks eke out some gains. Mid-caps are relative outperformers.
BHEL rallies on a healthy second quarter while margin expands sharply and execution improves. The order book is also higher by nearly 40% on a year-on-year basis.
Ixigo's under pressure after reporting their second quarter numbers. EBITDA under pressure. The company reports a net loss of 3.5 crores as well. This versus a profit of last crore. However, on a cash basis, it's a positive. The EBITDA has turned negative largely on account of a one-off employee ESOP expense.
Union Bank in focus after reporting their Q2 numbers. Net profit down 10% while net interest income declines 2.6% on a year-on-year basis.
Shaily Engineering Plastics under pressure after its partner Dr. Reddy's receives a notice of non-compliance from the Canadian drug regulator for semaglutide injection. Shaily Engineering Plastics is a supplier to Dr. Reddy's for this weight loss drug.
Well, you're looking at the markets, and even as we speak, there has been some selling pressure come across, especially in the broader end of the markets. Some of the banking names are seeing quite a bit of a dip. Kotak Mahindra Bank, that particular stock, as we speak, near the day's lowest point. Quite a few EMS players as well. Mangalam, yesterday, L&T said something very interesting. They said that they're actively looking at entering the EMS space, and this could mean big disruption. And especially if you look at a player like Keynes, they're present in the precision engineering part of the entire EMS basket. So that stock is seeing quite a bit of a knock. But this stock, along with a whole host of other stocks, is what Upasana today has on our radar. This is our special segment, Midcap Movers. Upasana will take us through all of the stocks that are moving around in the broader markets.
Well, certainly. First up, let us look at what are the key gainers in today's trading session, especially on the back of their Q2 results. Canara Bank has reported a healthy set of numbers. The net profit has also seen a surge of 19% on year-on-year basis. Next up is PB Fintech, up nearly about 6% after reporting a good set of numbers with the operating revenue uptick of 38%. BHEL has also reported a good set of numbers with performance led by healthy margins and profit. Hence, the stock is up nearly about 5% in today's trading session. Sagility has also upped its FY26 revenue growth guidance to 21% from previous 20%. And lastly, BEML has also seen some sort of up move in today's trading session. Now, let us look at the key losers in today's trading session. Now, Ixigo is down nearly about 17% because of the weak Q2 numbers. LIC Housing Finance was also down nearly about 4%. Sagility, Shaily Engineering has also seen some sort of a dip. And lastly, IEX has seen a dip of nearly about 3%. This is because of, mind you, that today is a hearing on the market coupling scheduled in today's trading session, which is why the stock is seeing a bit of a knock out there. So all in all, these are the top movers.
All right, these are the top movers. Just keeping an eye on a couple of these other stocks which are buzzing around as well right now. Canara Bank posted its numbers, has seen a sharp spike up 3.5%. PB Fintech extends its gains, and at the same time, we are seeing some bit of profit taking in Varun Beverages after a 9% up move that took place. Maybe the street, on the one hand, overestimated the positives of the foray into the alcohol business, but the management did say that the India foray into alcohol is not immediately on the horizon. They did not rule out the possibility, but definitely not something that is immediately on the horizon. LIC Housing Finance at the low point as well. Let's call Siddharth Rai Mangla, the senior research analyst at Stockbox Technologies, for a quick check on the market. Siddharth, immediately after breaking the 25,900 mark, the Nifty swiftly broke 20-25 points as well. Do you think towards the latter half of trade we will see this accelerate, or maybe at some point there will be some recovery?
Hi, Mangalam. Good afternoon. Thanks for having me, first of all. See, Mangalam, if we talk about Nifty, the undertone positionally in Nifty is strictly still bullish. So, first of all, positionally, we have to be bullish in Nifty. But Nifty, having said that, Nifty playing zigzag above and below 26,000 in the past couple of sessions has shaken some confidence of the bulls. In fact, a lot of the stop losses are being taken out today itself, which can definitely extend this fall towards those 25,820, 25,800 mark. So there are two ways to play such a market, Mangalam. The first one is to just sit on the sidelines and to mark these two levels, 25,800 on the downside and 26,100 on the upside, and to look at these levels very closely. Once the market index is out of this range, then definitely we can start taking aggressive positions. The other way is to take an eventual long position using an option spread, such as a bull spread, for example, because eventually we will see the index going back above 26,000 towards 26,100, 26,150 levels. But because of a spread, we will be able to absorb these zigzag moves in Nifty, and our stop losses will not be taken out. So these are the two ways to play such a market. But eventually, we should be positionally bullish on the index.
Okay, got that. Siddharth, any individual trading picks for the day?
Yes, definitely. Vivek, see, there are two stocks, and I think in such a market, it's much better to keep a balanced approach. So one stock we have to buy, and the other stock we have to short. First one we have to buy the stock. The name of the stock is Biocon. See, we saw a very big breakout in yesterday's session, probably a breakout above 2.5, 3 months. Big resistance. So that was a very big breakout. Today we're not seeing a very big move, but just sustaining above those levels is a very good signal for this stock. So I think this stock is very well poised to move towards the big 400 mark. So Biocon can be bought right now. The spot is trading around 374. Our stop loss will be at 366, and the targets being, first target is 395, second target being 405. The second stock is SRF. This one we have to short because the stock looks weak. We saw a very sharp fall from 3,200 levels in the past couple of 3-4 sessions. In fact, now the stock has gone below 3,000, which is a very important and a big mark. As long as we are below 3,000, this fall can extend towards those 2920 levels. So SRF November futures can be shorted here. Right now, this November futures is trading around 2988, 2990. We can short it here. The stop loss will be 3010, and our targets being the first target 2940 and the second target being 2920.
Just quickly before we let you go, there are Adani Power numbers at the bottom of the screen as well. Siddharth, do you have a view on Fed FINA? Because there was a story that came in from our colleague that there is likely to be a clean-out block trade, and on the back of that, there was a spike in the stock. But over the last month or so, it has seen a bit of a decline. So do you think this is just a bounce which is, untradable, or do you think there has been a bit of a bottom which is put in?
We're talking about Adani Power, right?
No, Fed FINA, Fed Bank Financial. Adani Power were the numbers.
Okay. Just a moment. Not able to, open the ticker of this stock.
All right, no problem. We'll try and get your views on another stock another day. But meanwhile, we'll just take that short break. On the other side, it's all about numbers. UltraTech Packaging joining us now to discuss their second quarter numbers. After this short break, stay with us. Welcome back. The Nifty is now extending its cuts right now, and a large part of that has been because of the Nifty Bank, which was earlier not falling as much, but now extending its fall. And the other part is Reliance as well. Reliance too has moved to the low point of trade. So the Nifty Bank falling in the last few minutes and Reliance being at the low point of trade does not help the cause of the Nifty. And all of that coupled with the India VIX inching mildly higher tells you that maybe we can see a little more on the downside. Just monitor how the market goes from here on itself. 25,880 is where we are at right now. But UltraTech Packaging, that posted their second quarter earnings. There was an expansion in their profits as well as the margins, but the volumes grew by just about 7%. Mr. Lakshmana Rao, who's the chairman and MD at the company, joins us now to discuss these numbers and more. Thanks a lot, Mr. Rao, for joining in. Second quarter volumes grew at 7%. First half grew at around 11%. I remember when you last joined, you said that you will look at 12 to 15% volume growth in this and the next financial year. Are you sticking to that? Do you have more clarity on whether it will be 12 or 15? And also on the EBITDA per kg targets, where do we stand?
See, yes, I said it will be minimum 12% volume growth, but we have ended up at 11.1% for the half year. And hopefully with the GST reduction on food and FMCG and rains being, now slowly will come off the ambience, there should be improvement in the demand for paints and lubricants as well as for our food and FMCG products. And with that, probably we can still aim at 12% overall volume growth. But one point I want you all to notice is that the volume growth comes surely by weight of the polymer we process. But in the case of food and FMCG and pharma, the product weights are less and their contribution margins are better. That's why you see our 6 months EBITDA is more than 40.5 as against 37 and odd last year, same time. So there's almost 9 to 10% increase in the EBITDA margin. And that is what is due to the 45% growth we achieved in pharma packaging products over Q1. That means
Got it. Yeah.
quarter, we raised pharma growth by almost 45%, which is going to improve the bottom line.
Understood that. Mr. Rao, so, just to get some clarity, volume growth, which you mentioned, is impacted by weight. We understand that, in the analyst call, you've marginally lowered that to a 10% target for FY26 versus an earlier guidance of 12 to 15%. But we understand that the sales growth guidance or the top line growth guidance is retained at 12 to 15%. So is that because of, better realization?
Yes. Now you can see very clearly, while the volume growth is just 7.3% in the quarter, that is, 6.9%, the sales grew by 9.7%. And the raw material price have actually come down by 2.5%. That means effectively we are in a position to sell at a much higher price per kg.
Right. So what does this mean in terms of EBITDA per kg for this year and the next year? Because the contribution from F&F and pharma will only increase next year, right? So where does that number stand at right now, and what is your aspiration?
Yeah, last year we hardly did around 9-10 crores in pharma. Now per quarter we are doing 10 crores. This quarter we ended up 10.2, and last quarter we did about 8 plus. So probably we end up this year somewhere around 35 to 38 crores. That's what I guided in the beginning of the year itself. We are on track. And next year, we are aiming at 55 to 60 crores from pharma packaging. Orders and clients are on the way. And in food and pharma, for food and FMCG, our plant at Panipat started commercial production in September. There are orders flowing in. We have signed a major agreement with a dairy in North India, which will be contributing about 5 to 6 crores to the top line in the next season itself.
No, we understand that. So that is growing. We have those numbers that you've guided for and the updated numbers on that as well. But on EBITDA per kg, because as the contribution of F&F and pharma increases, your EBITDA per kg will also increase, right?
That's what you are seeing from 37.6 last year, full year. It is 40.6 for the 6 months. And I hope this will close around 41 probably in the full year. That is a jump of almost 8 to 9% on EBITDA margin, which is considerable. So going at this, if not at this pace, looking at 41, 42 for next year is definitely possible.
Okay, so 40 plus this year, closer to 41, and anywhere between 41 to 43 for FY27 is the kind of EBITDA per kg that you're looking at. Is that right?
Yeah, you can say 41 to 42 for next year.
Right. Let's have a look at the paint segment. While one of the largest customers, Asian Paints, this particular quarter, it appears to have been slightly muted. But on the other hand, the Aditya Birla Group is quite strong. So what is the trend that you're seeing over there? November, December, has there been material pickup as far as, volumes there are concerned?
Their indication of November is good from ABG and even for Asian Paints. Because of rains and followed by quick early Diwali, I think the quarter passed by has been tepid for most of the paint industries, but for ABG. ABG because they're riding on a very small numbers last year, which they're ramping up this year. So their numbers are appreciably high. But their indications for future also are very strong. And I hope November onwards, paint volume pickup will be good. If you also notice, maybe the data is not available. For paint also, from 188 rupees, our selling price has gone above 190. In spite of raw material coming down by 2 rupee 50 paisa, that's basically because of IML adoption.
Right.
By Asian Paints. So whatever we guided in the previous quarters, slowly the paint per kg sale value is improving because of more and more IML adoption.
All right, we take that point. Thanks a lot, Mr. Lakshmana Rao, for joining in and giving us all those details. The street takes note of that, but right now the street is also taking note of the important line that is coming from Cipla. Along with the numbers which were largely in line, the big trigger for Cipla was Umang Vohra's reappointment. In fact, Umang Vohra himself has said that he does not seek reappointment, and Achin Gupta, who's the global COO, has been appointed the new MD and CEO with effect from April 1. Achin Gupta has been appointed as the new MD and CEO for the next 5 years. He's currently the global COO, and Umang Vohra, who we've been watching for such a long time in Cipla as a person who's helmed that company from strength to strength, is likely to step down and not seek reappointment. We'll shortly get Ekta as well to weigh in on this one.
Well, the stock has cooled off significantly. At one point of time, it was close to the 1590 mark post the results. The US sales, like Ekta had pointed out, was slightly above estimates. But after that, just on the back of this particular development, down over 4%. Ekta, take it away. You've been tracking this name for a while.
Well, yes, but this was expected. Exactly. There were rumors that Umang Vohra has, he's spent enough time at Cipla and now he probably wants to move on. He does have, I think, his son who's in the US as well. So okay. I think there are lots of personal reasons attached to the fact that, Umang Vohra wants to move on from Cipla. So this was pretty much expected. But what the street is actually reacting to is that Umang Vohra was actually quite an anchor for Cipla for as many years as he was there. So because of that kind of leadership and the fact that the promoter family is now not too involved or not involved at all when it comes to Cipla, then there becomes a bit of a vacuum on the top where you really want that strong anchor to probably take Cipla forward. Because before Umang Vohra also, there were some amount of leadership changes which had taken place quite frequently at that point in time. And after he came on board from Dr. Reddy's, there was a sort of stability and a stable ship that Cipla was running on, and he was extremely focused in terms of the US business, in terms of the respiratory business and scaling it up, scaling India up, and really putting Cipla on the mark when it came to the respiratory portfolio that they had. Right. So I think that's the reason why you're seeing the stock down around 3.5-4%, because retirement is a part and parcel of every CEO and MD. Right. But what happens post that and the vacuum which is created at the top for Cipla in particular, considering that there's no strong leadership from the family, is something that I think the street is now reacting to.
All right. As of now, the appointment has been made of Achin Gupta, and it will be very interesting to see where Umang Vohra goes from here on as well. He's been there since 2016 at the helm and in the company since 2015. With that, let's get a quick note for you viewers. If you'd like to access expert-driven insights and actionable chart patterns, simply scan the QR code which is there up for you on the screen. Subscribe to Money Control Super Pro. You can get daily expert calls, actionable charts and insights to power your investing decisions. In fact, this festive season, there's more reason to celebrate as well. 10 lucky subscribers every day win 1 gram of gold. So don't wait. You can scan, subscribe, make your portfolio shine brighter with Super Pro. Welcome back. While, the markets are taking a leg down, we have one stock which in particular has been underperforming right from the word go this morning, and that is ixigo or Latravenues Tech. And that's the stock which is on our mid-cap spotlight. Why do I say the stock is tanking? Because if you look at the reported numbers, the revenue of the company grew by 37%. And on a reported EBITDA basis, there was a loss of 3.6 crores versus an EBITDA gain of 18 crores. And that flowed all the way to the bottom line, where the company reported a loss of 3.5 crores versus 13 crores. But here's where the catch is. The EBITDA adjusted for ESOP expenses is actually up 36% at 28.5 crores. So that's the number one should look at. Reported EBITDA obviously is because of that non-cash ESOP expense. And even if you look at the internals, gross transaction value was up 23%. Revenue was up 37%. Gross transaction value up 23% implies that the take rate of the company was higher, and that is reflecting in the contribution margin, which has increased by 20% as well. Across the board, flights grew by 29%. That's margin accretive for them. Buses grew by 51%. That's a low base, but growth driver for the company. Trains, obviously, 12%. Second quarter is usually seasonally the weaker quarter for all these travel players. But because of higher take rates, their contribution margins have increased by 20%. And cash flow from operations, that's the real metric as against just the EBITDA. When there is such a large non-cash expense, cash flow from operations itself is up 30% at 91.5 crores. So yes, the street got spooked by the fact that there was a reported EBITDA loss, but the internals suggest otherwise. And now the triggers as well. There is a stronger season in the second half. And more importantly, if you look at revenue stack, Process invested about 1,300 crores for 10% stake at 280 rupees per share. And in that release, Process said that they intend to hold up to 16% stake in the company. So 10% has been given by our QIP, but the other 16% the management said they can buy from wherever. So you do have, some support coming in from Process's intention to increase their stake up to 16% as well. So that suggests that, while the stock had opened lower because of a reported EBITDA loss, the internals are a lot stronger than what the street is worried about.
Well, very interesting, especially the Process part where you mentioned that they could actually pick up another 6% stake and could be from the open market as well. But with that, it's all the time we have on this edition of Mid Cap Radar. MF Corner when we return.